Welcome back to the deep dive. Today we're tackling something pretty interesting. A real paradox, actually. How can a company that's so central to this whole AI boom be basically flying under Wall Street's radar? It feels like the market just misses things sometimes, right? Big things.
It really does. I mean, think about it. If cloud infrastructure is the bedrock, the foundation for AI, kind of like oil rigs were for the oil age, then CoreWeave is out there building, well, potentially the digital ExxonMobil for our century.
Yeah, that's a great way to put it.
But the market's reaction,
Yeah.
it's less rational, more, like you said, unpredictable, like a toddler with a mood ring, as one source put it.
Yeah, I saw that. Okay, so our mission today for this deep dive is to figure out why. Why is this company, which looks like it could be, one of the best deals in AI infrastructure, getting ignored? We're talking CoreWeave. It sits right at this intersection of, like, NVIDIA's power, huge AI demand, and just smart startup thinking.
So let's break it down. What is CoreWeave exactly? Fundamentally, it's a specialized cloud provider, but not like your typical AWS or Google Cloud. It's built specifically for high-performance computing.
Right, so think heavy-duty stuff.
Exactly. Generative AI model training, complex VFX rendering for movies, real-time AI decision-making, that kind of thing. They provide the sort of bespoke muscle needed for these really demanding jobs.
And the origin story is pretty revealing, too, isn't it? Founded in 2017 by 3 former traders, interestingly enough.
Yeah, and here's the really smart part. They saw the AI wave coming. They pivoted, like, super hard away from Ethereum mining.
Which was huge back then.
Right. And straight into AI infrastructure, just as the GPU market was starting to, well, explode. One source said it was like they spotted the tsunami while everyone else was still mining monkey JPEGs.
That paints a picture.
Yeah.
They had foresight.
Incredible foresight. And now they're leasing out tens of thousands of NVIDIA H100s. These aren't just any chips. They're the absolute top tier, the golden goose of GPUs.
And they're building data centers like crazy to house them all.
At an astonishing rate, yeah. And this infrastructure, this specialized power, is what's running behind the scenes for a lot of the AI stuff you, the listener, probably use every day, often without even thinking about the sheer horsepower involved.
Okay, so the tech is there, the demand is obviously there. What about the money? The numbers seem to reflect this growth, but Wall Street's reaction is muted.
Well, yeah, it's not public yet, so you don't see a stock ticker.
Yeah.
But privately, the valuations have just rocketed. We saw a jump from, $2 billion to $7 billion in mid-2023 alone.
$7 billion, okay.
And that's not even the biggest news lately. Just this past May 2024, they locked down a massive debt deal, $7.5 billion.
$7.5 billion just for building more data center?
Primarily, yes. And look who led it, Blackstone, along with some other big names. Blackstone, or they're often called the private equity Death Star for a reason. They're very thorough.
Right, they don't make bets like that lightly.
Exactly. You don't get a $7.5 billion check from them unless your business model is looking incredibly solid, like basically a license to print money, as one source put it.
Okay, so that's a massive vote of confidence. The numbers are there, the big players are betting on them. So why isn't the broader market, salivating? What's the disconnect?
I think it comes down to how the public market often operates. It can lack nuance. If there's an immediate IPO on the horizon or big dividends or a stock split generating buzz,
it just doesn't register on the radar.
Pretty much. It often gets overlooked, especially the sort of foundational stuff. The market likes shiny objects, immediate payoffs. This highlights how sometimes the real engines get missed while everyone chases the more visible trends.
Speaking of engines, let's talk NVIDIA, because CoreWeave's relationship there seems absolutely crucial. One source called CoreWeave NVIDIA's backdoor power move. What does that mean?
It means they have this guaranteed purchase agreement. So while everyone else, even the giants like Amazon, Google, Microsoft, while they were struggling to get enough of those high-end NVIDIA GPUs,
CoreWeave had them locked down.
They had secured inventory. This became a massive advantage. Suddenly, CoreWeave was one of the very few places that could actually deliver large orders of GPUs.
So they could fulfill demand when others couldn't.
Precisely. That made them incredibly attractive, obviously, to AI startups desperate for compute power, but also to bigger companies.
And this leads to that really striking detail about Microsoft, right?
Yeah, this one is.
Yeah.
Wow. Microsoft, the company that owns Azure, a massive cloud platform itself. Reportedly, they signed up to use CoreWeave's GPUs.
Wait, Microsoft using a competitor's infrastructure?
Because Azure apparently couldn't keep up with the GPU demand needed for some of OpenAI's workloads. Let that sink in. Microsoft needing CoreWeave to fuel his partner, OpenAI.
That says a lot about CoreWeave's capacity and NVIDIA's strategy.
It really does. It shows the strategic importance, the unique position CoreWeave carved out. It's not just about NVIDIA selling chips. It's about who enables the biggest AI plays.
So this brings us back to that paradox. You have investors throwing money at AI applications, OpenAI, Anthropic, you name it. The hype is intense. But the infrastructure, the actual, pipes and plumbing making it all work.
Gets treated like it's boring or just assumed.
Yeah, like plumbing nobody really wants to think about, let alone pay a premium for.
It's kind of wild, isn't it? Because those flashy AI companies literally cannot function without this back end. CoreWeave is the one actually housing the machines, powering them, cooling them, keeping them running 24/7.
But it's not sexy.
Not in Wall Street terms, no. It's not a story stock in the same way.
Right.
Its job is basically plug in the damn GPUs and keep the fans spinning.
That doesn't make exciting headlines.
It's the classic picks and shovels play in the gold rush. But it seems like investors are mostly chasing the gold nuggets, not the tools. Exactly. And a big part of why it's overlooked by many is simply because it's private. There's no ticker symbol for Reddit to rally around, no Robinhood accessibility.
So the average retail investor just doesn't see it.
Right. It's largely invisible to them, even though it's making huge waves in the actual tech world. It's like that old saying, Wall Street often only notices you when it's almost too late, when the massive growth has already happened privately.
But an IPO has to be on the cards eventually, right? With this kind of momentum.
It seems almost inevitable. And you can bet when it does happen. The same analysts ignoring it now will probably be tripping over themselves to call it revolutionary, the future of AI, cloud, whatever.
It does feel like a matter of when, not if, because the demand for AI compute isn't slowing down.
It's doing the opposite. It seems to be growing exponentially. Think about the next generation of models, like a GPT-5 or whatever comes next. They won't run on wishful thinking.
They'll need hardware. Lots of it.
Racks and racks of powerful, probably liquid-cooled GPUs. And CoreWeave is positioning itself as a primary landlord, basically, for that hardware.
People are comparing it to the AWS of AI. Is that fair?
It's a useful analogy. I mean, they reportedly launched with the specific aim of disrupting the big general-purpose cloud providers in this niche. Their strength is specialization.
So not trying to be everything to everyone, like AWS or Google Cloud.
Exactly. They're laser-focused, a master of one, you could say. Optimizing their whole setup, hardware, software stack, everything purely for these high-intensity AI workloads. It's like a dedicated power plant just for AI.
And that brings us back to Blackstone and the $7.5 billion. That wasn't just a random punt.
Oh, definitely not. That was a highly calculated bet from one of the smartest players in finance. They're putting serious money behind a thesis.
And that thesis is?
It seems pretty clear. AI demand is exploding. High-end NVIDIA GPUs are scarce and essential. CoreWeave has preferential access to that supply and the customers who need it. And they make very good money from each rack of GPUs they operate. Looks like a pretty compelling equation.
What about the risks, though? There must be some.
Well, you could worry about them expanding too fast, maybe taking on too much debt, but that NVIDIA demand pipeline seems to mitigate that risk quite a bit. It's almost guaranteed business for the hardware they install.
Could NVIDIA just cut them out and rent GPUs directly?
Unlikely seems to be the consensus. Right now, NVIDIA's incentive is to sell as many of these very expensive, high-margin GPUs as possible. CoreWeave is a huge, reliable customer buying them by the truckload.
Yeah.
Why disrupt that?
Okay, and the risk of AI demand just fizzling out.
That seems like the longest shot of all right now.
Yeah.
Everything points the other way. Look, even if things cool down unexpectedly, CoreWeave would still be a valuable, specialized provider for high-performance computing. The downside seems limited.
So the trajectory seems pretty set. An eventual IPO, continued growth.
It certainly looks that way. The underlying forces are just too strong.
Which makes you think, doesn't it? In this world that's so obsessed with the shiny new apps, the front-end excitement, what other crucial, maybe kind of unsexy infrastructure is quietly being built right now, overlooked? Stuff that's silently enabling the future right under our noses.
That's a great point. CoreWeave really is a case study in that. It's the engine, the powerhouse for so much AI innovation. But the market signal, right now at least, seems lost in the noise.
It's a lesson in maybe looking past the hype, isn't it? Looking at what actually makes things work. Sometimes the biggest value is in those foundational pieces, the ones that aren't necessarily glamorous.
Absolutely. Understanding the infrastructure can be key to seeing where things are really heading long term.